is that investment by the council is essential, and it's essential in the order of the quantum that's proposed, together with a large level of debt funding by Crown Irrigation in order to achieve a water price that's financially viable both for water users and for investors. Secondly, and I'll speak to this slide in a second, recommendation 4 asks you to note that the RWSS, as proposed, will make an important contribution to achieving Council's strategic environmental objectives. And on the left-hand side of this chart, you will see a number of those called out, and they are called out in your paper as well. So a constant minimum flow required at the base of the dam, which provides 20% or so of the 7-day mean annual low flow at Red Bridge, releasing extra water when the Waipawa and the Tuki at certain measuring sites approach their minimum flow to ensure those minimum flows are not breached, and also that irrigators who are tied to those flows are not affected by going below the flow. And noting that there are 6 substantial environmental management, mitigation and offset projects. The next noting recommendation notes that there is substantial environmental monitoring to be undertaken by the limited partnership and its operating entity, the general partnership, at their own cost. And then, noting recommendation 6, notes the proposed production land use consents, which ensure that the nitrate limits, whatever they are, that are set when the Board of Inquiry makes its determination on Plan Change 6, are met by the RWSS, and notes that there are a range of farm environmental management plans, auditing processes and so on, which are set out in the column headed B in the chart that's on the screen. There are a wide range of other environmental monitoring and management requirements which, in our view and of our legal advisors, are individually and collectively at least as stringent and generally more stringent than are applied to irrigated land use elsewhere in New Zealand, including that explicitly stock are excluded from all lakes, wetlands, permanently or intermittently flowing rivers on any property to be supplied by the RWSS. Noting recommendation 7 asks you to note that there will be substantial contributions to the Council's strategic regional economic development objectives. And as this table shows, and this is from the Butcher report, which has been submitted to the Board of Inquiry. The value added total economic impact is $250 million a year. The potential NPV of that is $3.7 billion. And that these benefits are reasonably widely distributed over a range of different sectors of the economy, so that on farm, the value added per year is projected to be $73 million a year. In farm support and servicing industry, $63 million a year. In value added to processing and processing support, $120 million a year. As your paper notes, the economic multiplier from on farm is 3.4. So the added value benefits are distributed throughout the wider regional economy, and that's consistent with findings that have been taken from ex post, in other words, after the fact studies of the benefits of the Opua water storage scheme in South Canterbury. As this table also shows, and recommendation 8 notes, that there are projected to be substantial employment and social benefits, so more than 2,500 jobs, and household incomes on farm, in farm support and processing and farm support amounting to $125 million a year. Recommendation 9 notes the agreements that have been entered into with Mana Whenua and Kaitiaki, the Tamatea Agreement, and 2 joint memoranda that were entered into with Ngāti Kahungunu Iwi Incorporated and Te Tai Whenua o Heratonga, and those are all acknowledged in both the concession deed and the project agreement, and both of those documents require adherence to what has been set out in those agreements. Recommendations 10, 11 and 12 step through the decision-making sequence and the timeline of the Board of Inquiry process, and note that a key decision of the Board of Inquiry in relation to Plan Change 6 is likely to be about the nitrate limits in the Tukituki River. And it's fair to say that depending on where the Board of Inquiry lands on that, that could have quite significant consequences for whether and how the proposed RWSS would be able to operate. And also note that in regard to the dam and the distribution system, there was no expert engineering evidence submitted to the Board of Inquiry that contested either the design, the seismology, the engineering geology and all those factors, or the location or the operations of the proposed infrastructure. Your recommendation 13 notes where we are at in finalising the design and construction process. And as it says, to the maximum extent practical, we believe that this is on a fixed cost and fixed time basis. It will be subject to expert panel oversight in the final design stage prior to submitting the building consent from the Waikato Regional Council. And as I think most of you are aware, the Waikato Regional Council does dam building consents for all the regional councils in the country. That design is already in the public domain, able to deliver a volume of 104 million cubic metres of water, significantly larger than the proposed 91 million cubic metres at the feasibility stage, without affecting the residual flushing flows or other environmental flows required in the consents. And it provides water to all users on a pipe distribution at a pressure of 3.5 bars at the farm gate, which is also a significant improvement on no pressure and supply up to 2 kilometres from the farm gate at the feasibility stage. And we have settled and publicised a water price of 23 cents a cubic metre plus a variable charge for pressurisation up to 3 cents a cubic metre. This chart, which I've just put up on the screen, is a finer breakdown of the wedge on the first slide at Makaroro. So the inflow to the proposed dam is 201 million cubic metres, 200.6 if we want to be really precise, million cubic metres per year. 52% of that, 104 million cubic metres, is proposed to be supplied at full uptake in contracts to water users. Between the residual minimum flow and the flushing flows, a bit over 43 million cubic metres, or 22%, will simply pass through the dam except for the flushing flows and provide that residual minimum flow. There's a very small amount of water that has to be released in an average year to sustain the minimum flows on Waipawa and Tukituki at RDS and Taparo Road respectively, and over 50 million cubic metres of water in an average year simply flows through the dam and is not allocated to any of these purposes. You can think of that unallocated water, if you like, as a 50% safety margin on to 104 million cubic metres of contracted water. That allows, allows for year-to-year variation in climate and rainfall and runoff into the dam, so that in a drier than average year, the dam is still able to supply the contracted volume. But in other years, obviously, the bulk of that water will simply be spilled from the dam and run down the river. Recommendation 14 gives you the current state of play on water uptake. We have expressions of interest for 47 million cubic metres. We're seeking a target level of 40 million cubic metres of contracted water before financial close, and that is a condition precedent that has to be achieved before financial close. Another slightly complicated diagram, I'm afraid. Again, setting out the project structure. As I said before, it's intended to be owned, the RWSS, as a build, own, operate and transfer project with the investors as set out in here and compared to the previous chart with the possible addition of an investment to be made by Hawke Takatini. That is obviously contingent on a treaty settlement being reached there. That shows the Ruataniwha Water LP as the owner of the scheme, with its general partner as the operator of the scheme. Again, the concession deed with the council, the project deed about the lease and the licence of the site and other matters with HBRIC, and the resource consents to be granted by the EPA. Contracts for the design and build, again, it's in the public domain that the preferred contractor for that is the OHL Hawkins Consortium, and are yet to be entered into an operations and maintenance contract for the scheme as a whole. In 15.4, your recommendation, again, I just note for you and remind you that local eligible investors, including farmers who've contracted for water, will have their investment aggregated by the limited partnership, the Tuki Tuki Investment Limited Partnership, and it's expected that to the extent that there is local iwi investment, a similar limited partnership or limited partnerships is likely to make any local iwi investment. And at the end of the concession period in 15.5, those parties are expected to have continuing proportional ownership of the assets and the infrastructure, or of the entity that owns the assets and the infrastructure. In regard to the capital raising process and the capital structure, recommendation 16 sets out the points that I think I need to make there. I'll call out point 16.3, where it's expected that HBRIC Ltd will subscribe, assuming that Council approves and subscribes for additional equity in HBRIC, up to 80 million of equity in the Ruataniwha Water Limited Partnership. It's our current expectation that the likely amount from us would be 72 million, of which 63 million would be in cash and 9 million would be already expended development expenditure, for which we would receive equity interests allocated on a dollar-for-dollar basis. If I turn to recommendation 17, which sets out the terms in which HBRIC proposes to invest in the Ruataniwha Limited Partnership. As it says in 17.1, HBRIC Limited will accept the low priority for cash flows during the uptake period until the exit of the Crown Irrigation Investment Limited funding. And the reason for doing that is in order to ensure an acceptable water price that encourages uptake. During the uptake period, HBRIC Limited will make a lower rate of return than commercial investors or institutional investors over that period. But after the uptake period, which probably ends around about year 15. For the remainder of the concession period, for the next 55 years then, if the uptake period ends in year 15, it would be 55 years. HBRIC Ltd will then make the same return as all the other investors, and that is currently modelled in our base case financial modelling as 10% post-tax internal rate of investment, which we believe is a good rate of return for a brownfields infrastructure investment, which is what this would be at that point. All of the uptake risks will have been mitigated. 17.4 points out that the lower rate of return and slower rate to profitability that HBRIC Ltd proposes to accept on the investment that it would make in the Ruataniwha Water Limited Partnership are consistent with the provisions of our Statement of Intent with Council when the investment is, and I quote here from our Statement of Intent, is to help achieve Council's regional strategic economic development objectives by investing in assets that will benefit the Hawke's Bay region as a whole. So that's from pages 3 and 4 of our current Statement of Intent. It is also in our draft Statement of Intent for next year. And as noted earlier, the RWSS is projected to make substantial contributions to those strategic regional economic development objectives, and they will be dispersed over the region.